Hello, everyone. Welcome to this webinar brought to you by Kenanga Investment Bank in collaboration with Bursa Malaysia and managed by Wealthford. Today, we are very excited to be doing this topic, Basics of Day Trading 101, how to day trade the market profitably. All right. So welcome everybody to this webinar. Now, before we begin this session, let me give a shout out to the Kenanga Humankind Project. Now, Kenanga Investment Bank is urging all our attendees today to pledge a meal at 20 ringgit. You may scan the QR code here to support the community in need. So for this Kenanga Humankind Project, we are raising, our target is to raise 50,000 ringgit to help sustain employment opportunities for the disabled employees at the cafe includes. So for every meal that you pledge to this community, Kenanga will match meal for meal. All right. If you donate 20 ringgit, Kenanga will also put in 20 ringgit. Right. So at least 2 persons will not have to go hungry. And it will also provide training and development to disabled employees at cafe includes. So all these meals pledge will be given to children in need. All right. So if you are if you want to participate in this, to support this cause, you may scan the QR code at the bottom right of this slide, in which where my mouse hovers. So you may scan this QR code and it will take you to the campaign page where you can pledge a meal at 20 ringgit and Kenanga will match meal for meal. All right. So just a quick shout out. Now, so welcome everybody to this webinar where we talk about the day trading. Now, disclaimer for this webinar is that whatever you share in this session is only for educational purpose. In no way that I give any recommendation for you to buy and sell any listed securities. Should we mention them here? So if you decide to make any investment decisions, you're 100% responsible for all your investment risks. Now, today we'll talk about how to day trade the market profitably. So as you know, we can day trade the stock market as a living. Okay, so day trading can be a professional career, and it could be a very exciting career that can give you mobility freedom. That means you can trade the market profitably anywhere, or you can trade any markets so long that your broker provide the access to you. But day trading could also come with substantial risks if you don't know how to day trade it profitably. All right. So there are various markets. You must understand the market dynamics and also have a trading system that can give you an edge so that you can succeed in day trading. So today we are going to explore day trading and also the various strategies to profit in the day trading in this short term. All right. So we are very excited to have invited Mr. Adrian Ng, who is the head of Quant Sales and Advisory from Kenanga Investment Bank, to share with us how do they trade the market profitably. So without further ado, let me hand over the session to Adrian. Adrian, how are you?
Hi, good evening, Shane. Yeah, so far so good.
Awesome. All right. So
thanks for the hosting the event, and thanks to everyone that joined tonight's session. Spending your rainy night with me could be a bit boring later. I couldn't guarantee that, but how should we do this, Shane? Should I introduce myself a quick one?
Yeah, sure. You may. You can also share your screen.
Then I'll start the session after, right?
Yep.
Okay. A little bit of a background of myself before I start the session is that I joined Kenanga as a research assistant in 2011, and I was in research for almost 9 years. And seeing how the market moving forward, I was also granted an opportunity to join a new team to do something very new, which is the department that I'm currently in, Quant and AI Trading Solutions. So a lot of people would have asked, what is this department about? I must qualify, I'm not a trader, but the forte is actually in research itself and how we can come up with a structured way that we can actually look for probabilities on how we can make money in the market. So what do we do here in our department is like we are looking to propel forward with more usage of machines going forward to assist us in our day-to-day trading capabilities. And let me first share my slide. upwards. Okay. Okay, is the slide up? Can everyone see?
Yes, can see your slide.
Okay,
Perfect.
so without further ado, maybe I shall proceed. Hold on. Okay. Shane has highlighted the disclaimer earlier, so I'll just skip that. But I would like to request a help from you guys for a minute. Can you guys pick up your phone and turn on your camera and scan this QR here? There's a surprise in there. I will give everyone almost like a minute to do that. Then I'll tell you what the surprise after you scan it, or you would have found out the surprise after you have scanned it. It's quite a nice QR code actually with the logo there. I mean, while being quite tech savvy in the trading side, I'm not too tech savvy on the social media side. So kudos to my marketing team. Yep. And also for the effort of coming with a very nice background of the bull and bear. It feels like an NBA game there. Yep. So another 30 seconds for everyone to scan the QR code, and maybe I'll just move on to the next slide in another 5 seconds. 5, 4, 3, 2, let me go. All right. Well, it's not entirely a surprise, but what the QR code has provided is to join a list of our social media channels that we have came along the way, where you can go to our website, be a fan on Facebook, LinkedIn, Instagram, YouTube. We are even on TikTok now. Come on, IB on TikTok. That's so cool, right? And we have 3 Telegram channels in it. So what are those 3 Telegram channels, and what do they specialize on? Well, the first one is our award-winning Naga Warrants team, where the team has a lot of company and HSI structured warrants that in the market that help you to make money. And my colleague Isabel having a lot of webinar sessions to guide a lot of people to how to tackle on the warrant side. And the second one will be our Kenanga Trade to Win from Kenanga, where there's always stock watch list every day which you can refer to, and even trading signals that comes out from it. And the last one will be on our futures site, Kenanga Futures, where you can get most of your updates on derivative, your commodities at the fingertip. So all in all, I'm glad that everyone that managed to scan can start to click in and follow our social media websites. And that will allow you to have a lot more information at your fingertips. All right. So what are we going to talk about today, and what are the myths about day trading? A lot of people would be wondering, what do day traders do? Oh my God. Then what is the difference between day trading and investing? And Warren Buffett buying iPhone, buying an oil and gas company. What if you were to go into day trading? What are the essentials? Is there any tips? Are there any strategies? Can anyone be a day trader? And what's the future trend in trading or even investing? I mean, it should be a bit more informative, and I hope that more people would ask on Q&A, so that it can be a more interactive session rather than me. I mean, I'm talking literally to the screen now. I mean, I would have preferred to meet everyone here, but due to the constraint, yeah. So this is a myth. What do I think I do? Sometimes I wake up, I feel like I'm Jordan Belfort, I'm the Wolf of Wall Street, having fun, he's drunk, whatsoever. What my mom thinks I do, I'm a geek looking at the computer, staring at it like this. What society thinks I do? Maybe they think I robbed a bank because I'm pulling some big fat trades out there, rigging the market. What other traders think I do? Sometimes they might think I'm dumping money in the market. And what does my girlfriend think I do? I'm single, by the way. What do I really do? Today, I'm just pulling my hair. Almost every day. Why? The market is so volatile, and I'm trying to figure out how to approach it. Well, so this is a myth. But in actual fact, what do day traders do is The before market, let's start with before market. Before market, they will actually screen through what has happened the day before and look out for what are the stocks that are interesting, be it through fundamental news driven from Bursa announcement, the Age news, global news, watching on the technology sector or even oil and gas sector in US. Then during trading hours, they are actually doing what my mom thinks I do, staring at the screen, looking for opportunities. Is it an easy job? Well, it depends because it could be, but staring at a screen whole day can be very strenuous, looking for opportunities. Is there an easier way to do it? Yes and no, because sometimes the plans couldn't work out and you need to do a makeshift plan. And this is where the focus, the tenacity, and the time is used on during market hours. So what do we do after market hours? After market hours, there's one thing that is very essential that most day traders do, and what they really need to do to improve themselves is to do their review. Review their day on a day trades that they pull every day, every single trade to look, to recall, to put in notes, to see where the mistakes are, to keep improving themselves in that way. Is there any shortcut? Not really. But if it can be so tedious, why still go through day trading? Why not choose to be a Warren Buffett and just put my money in there, chill, grow old with it? And I mean, when I wake up, hopefully I'm a billionaire, but unfortunately I'm not. So the idea is simple. Why do we want to take on a bit of an active management on trading versus investing? So let me split the quadrant for a bit before I go to the difference. Is partly our capital can be a bit smaller compared to Warren Buffett. People like Warren Buffett, and he got unlimited cash flow coming in because he's buying a lot of business with good cash flow. But while as a person that works in a company or even a business owner, I only have as much money as my pay gives me and also side income provides for me. So I'll do a bit of an allocation of that budget of this money, let's say 20% of it, to do a bit of active management to increase the frequency of things so that I can grow the pot to park into the investment side. You see, there's a structure, there's a structure. So this is why active management on trading works also when you have the knowledge. And most of the time is premised on when we are more actively trading, we're premised on the technicalities instead of fundamentals. But you can combine both because there's a lot of people that promoting FATA strategy. It's called fundamental analysis, technical analysis. You combine both FATA, it is a Cantonese term, but essentially it's called gate rich, right? So having said that, so why? So, and what is day trading? A quick one. Moving to this chart, you can see I'm using a green color pen here. I mean, green ink. You can see this point here. Hold on, let me change the color. Why do I like use a green pen? Because I like it to be greener. So buy at this point, there's an intraday chart, 1 minute. Then when I buy at an earlier time and it moves up, I can sell it for a profit. At 9:22, I buy 1,000 share. At 12 something, wow, that's lunchtime. I made some lunch money at 25 ringgit. So imagine this, you add one more zero, it'll be 250 for one stock. So 250 a day, is it good enough for a commoner like me? I think I don't spend much, yes. But can I reinvest this 250? Well, yes. So once I have a 250 in my pocket or 25 ringgit, I might want to seek an opportunity in my next trade, but while managing the risk of not losing back this money into the market. So there will be a bit of a money management involved in this sense. All right. So is it easy? Like I say, it's not easy at all. I mean, nothing is easy. Like sometimes I wake up at the wrong side of the bed, even going tapao is quite hard. Huh? Okay, so day trading and investing, now moving a bit deeper into this. What is the difference? Well, in my earlier I've highlighted is an active management, while investing is actually a passive one. While short term, it can be end of day or plus 1 or 3 days. It all depends on the risk appetite that you want to carry over the next few days. So in a way, your frequency is definitely higher. Your profits are more in small pricing movements. I'll also share with you a bit more. Is there any opportunity to just buy stocks that go up or come down later? And I do encourage more Q&A, so that I like this to be really interactive, so that I can answer more questions later and you all can get something out of this session. And like earlier, as I highlighted, is the tools are more technical. While investing, it can be a combination. So that's why you see on longer term basis, you're with a very slow pace mentality of taking trades, right? You will actually grow it slowly without much of a rush. Most a bit of a tip on investing, I will always encourage people to look for stocks that have dividend yield as an anchor first basis. But today's topic is on day trading, so I'll move on. So why do people do day trading? Well, I must say we are all very blessed. Thank God for everything, and for everyone to be here today, because we have actually been through a lot in these 3 years time of COVID, where economy has been locked down, and this is actually the reasons people do day trading is because they fear of accident, disaster, and also negative surprise announcement, like certain companies that actually have accounting issues and overnight, or there could be a shift in administration. So these are all haunts us. These are the things that haunts us at night, and we can't really sleep really well. I mean, why go to bed with such stress after work, right? It's not worth it. So that is why people are going towards more of a shorter term. And why do we go shorter term nowadays? The key to go shorter term now is because of this magnificent tool called the handphone. So everything is actually on our fingertips. Information, money transaction, trading of shares, buy, sell, Shopee, Lazada, everything, almost everything. So it's always on our fingertips as compared to like 5 to 10 years ago, where when we need to trade at time, yes, of course, it's still on our fingertips, but the information is not. We need to call our reminder dealer, hey, brother, bang, well, help me believe these shares, so it's a bit different. Now you can do it on your own. So there are a bit more time, but I'll share with you guys later on what's evolution about. And so these are the key why people avoid slightly longer term trades. But one thing I must highlight is in shorter term trades, you must set this very right. When you take on a short-term position, it must never be a long-term, else you'll get caught. And I believe almost every one of us that attempted this would have got caught, because we shift our objective, we change this. Never change this. We must be very clear about that, of what we are actually taking on. So let me quote you an example of overnight risk can be very daunting. I'm quoting this stock because it's quite close to my heart. As I have introduced earlier, I'm an analyst in Kenanga for the longest time. And my previous portfolio is actually on the property and construction end. I'm one of the very first few analysts that actually promoted this stock called George Can, but I'm the only one that first called sell back then. I mean, you can Google back and check the report. So a bit of the timeline and back through memory lane is on May 18, George Can closed at 394. So, well, we have our election. We all have our finger got ink, not the tattoo type. Then on the 14th of May, when the market reopens, bam, boom, shakalaka, boom, shakalaka. So it went down 27.4 and 30% in 2 consecutive days. Do investors and even retailers have opportunity to run? No. No, at all. It just went down. And on the 15th, almost half is gone. Literally half. If you have bought it at 3 something, you would have lost half of your fortune. All right. So this is a repetitive slide. So yep. No, it's not. So this is just a calculation of a small amount. So imagine you buy a bigger amount, you have to lose 10 grand, right? So, I mean, I don't want to delve too much in history. Well, let bygones be bygones. So one of the very essential items of day trading, people will always ask, what do I need to? Is it knowledge? Is it leverage or whatsoever? I would say all of it. First, you really need time because you'll spend quite some time staring at the screen where people are actually wondering, what are you doing at the screen? Time. Second, leverage. Find a broker that gives you leverage. Means like if you have deposited about 10,000, they will give you a limit, trading limit of 20K, 2-time leverage. So you can buy a bit more, but that doesn't mean you silang. Jangan silang. Manage from the perspective of how much you can afford to lose. So before we approach trading or investing, always ask the question, how much can I afford to lose? This is very essential because if we lose more than we can afford, well, there's only one solution, APKT or KPKT. Yeah, we need to go for counseling. So, and seek assistance, it can be habitual. So the next essential thing of why day trading is made possible is also because of low brokerage. And nowadays, I mean, kesian lah kita sikit, work quite a bit, but the fees are no longer what it used to be. That's why we work even harder. And I'm glad that everyone joined us today for all I can afford, for the knowledge that I can share. So knowledge. And lastly, trading plan. Did you guys see that I actually highlighted it 3 times? Trading plan. Why do I do that? If you do not have a plan, do not trade. Do not trade if you do not have a plan. What do I mean by plan? First, you must ask yourself the question, how much can you afford to lose? What kind of criteria are you looking for? What kind of stock are you comfortable with? What kind of signals are you confident with? So we are not playing sand at the beach, right? So the gist of things is, if I have no confidence in what I'm doing, should I do it? No. Well, of course, as starters, one might ask, I just started this hobby in trading and I'm just a beginner. How do I start? Start small. Start small. Always start small and do not rush, because no matter how much you win or lose, the experience itself is invaluable. I always tell my share people around me saying that you'll never lose everything in the market, because sometimes it's just not a win-win situation. Why I say that it's not a win-win situation is because, well, win-win situation is I win experience and I win money, but sometimes I just win experience and pay some tuition fee. But most importantly, we need to learn from the mistake that we make. So what I've highlighted earlier in my first few slides on my sharing is, what do day traders do after market hours? You must constantly review yourself on what are the mistakes and where you can improve your trades. Are you being too anxious during trading hours, and how to overcome it? Because when you have the knowledge, the next hurdle that you need to overcome is actually your confidence issue. Is more mental. So you need to overcome that. And ironically, confidence being a trader is built on the success rate that you have and the money that you have, that you make from the market. So, but we all do make silly mistakes like uneven sizing that cause us a lot of problem. I win one big one, then I lose one even bigger because of my overconfidence. All this we need to review. It's very essential. So I hope that you all can just take picture. Then the next slide I want to move on to, while we have time, if time allows, and a good leverage, and the brokerage is so cheap. I mean, if you open a cash account with us, I think we are very competitive, and even our sister company, Rakuten, is very competitive. So then the next thing you need is knowledge. That's why, I mean, ask more questions later, don't feel shy, and come up with your trading plan. This is a discipline that you must always follow. Then the next slide, I'm going to talk a bit on some strategies on what day traders use, and a bit of an insight on how much could they make and what kind of sizing would they have bet. So essentially in today's session, I will just share a bit of mainly three methods that are it can be common, it can be quite uncommon. So the first one that is very common is actually scalping. Personally, I don't encourage scalping, but it still works. Scalping is the most popular strategy for our internal traders. We have one of the bigger in IVT teams in Malaysia, and they love scalping. Why? Well, our transaction cost is a lot cheaper. Remember, one of the trading essentials, low brokerage fee. Our fees are essentially lower if I'm an internal trader. So that's why I can buy, I can break even, I can buy, I can break even, keep repeating it. But is it perfect? Well, it's easy to make money, but over time, one person that are so reliant on scalping, there's only one way to make more money, which is go bigger and bigger in terms of size. But the problem in this current market now is liquidity is an issue. You might not be able to get out if your size is too big. In back 2 years back, I think traders in the market easily would have rolled up 5 to 10 million shares at one go. Now, I don't think they can even buy 500,000 shares and expect to get out from the market. So this is how the liquidity in the market has changed. So is it getting harder to trade? Yes, for scalping, yes. Even for swing trading, it is because of the volatility. So next one is daily pivots. Okay, daily pivot is something more technical. It's actually a formula, written by the Guai Lows. I forgot his name, but people that can write formula, I regard them as guru, the real gurus. Even I'm not a guru. I'm just, trying to benefit from what they did. Thank you, whoever wrote this. So daily pivot actually captures your day volatility, day high, low, close volatility to actually see where could be the support and resistance by forming a pivot point and 2 resistance levels and 2 support levels. So I'll draw it out later as we go a bit more in depth. Then there's one momentum. Momentum is the strategy that those people that have time that stares at the screen. I'll also share with you in a while. So we go a bit more in depth about scalping. So like I highlighted, scalping is profiting very small, entering quickly and exiting a position very quickly. I believe today, if anyone would have watched stocks like SFP Tech, LGMS, if you have jumped in for a while and you jump out, wow, there's some quick copy money. Recently, there's one park copy park behind my office. It's quite good. Try it out. This is why they keep repeating the process, because in the event that it comes down, they can just try to break even as fast. So in this sense, speed is highly essential. Speed is highly essential. Is it recommended for retailers? Better not. Better not. because suddenly internet koyak. So you'll be doing this, then I hope that you might not throw your phone away. So because when you do scalping, your sizing tend to be bigger. All right. So this is a table and example of position where you can position yourself upwards. 10,000 is actually very small, but I mean, just to give you a gist of what it can be and what it cannot be. So if you add a zero, everything will be inflated, like 2 zeros. So normally bigger traders will be, normally they call it satu tangan. Oi, taruh satu tangan, which is maximum order. Maximum order. Dua tangan kasih times 2. But like I said, half multiplied by this difference of 0.5% here. Well, I think you can do your own calculation. But unfortunately, market cannot absorb that volume nowadays. While there are stocks that run up quite a bit, the liquidity is not as robust as back then. So the sizing here could be lower. So I'm not too sure. There are a lot more successful traders out there, but what I'm here today is to share what do day traders are in terms of scalping, and I hope you all can actually have a bit more of an idea from that. So momentum stocks, oh dear, this is like I highlighted earlier, LGMS, SFP tax, Synergen, all these have good momentum. How do you look out? Well, in your trading screen in CanTrade, you can always do a quick one, either most active here or most change. So by that, you have a certain surge in price. And on a day chart, normally there's a bullish engulfing. Bullish engulfing means it's a big candle. Now you know why I use green color, right? Because we all love green candle. So can it, but this momentum trading strategy requires a lot of effort to actually look into the market to see what's happening, and you can combine it with a daily pivot and also scalping strategy. So it's just not this alone. Why do we use daily pivot? Is because we can have levels that we can refer to. So let me show you the chart. Can you see this here? Normally, if you see there's a big, huge volume, there's an opportunity to go up normally, but there are also chances that the trade might fail. Well, that's why stop loss is very essential. I'll touch on the trading plan later on how you can set it up. So this is how you can look out for. Remember, kita suka yang besar-besar. Hijau lah, macam the heart lah. So this is where I want to show you all that. First, this is the most active screen you can refer to. I mean, this is quite a dated. This is quite a dated screenshot. I mean, it's just in April. Well, we are not even there yet. Then the next one is top gainers. Something to refer, a quick one. Then why do we refer to this two? Is because you can have a quick gist of what is happening in the market. What's hot? Why? Let me give you an example. Imagine you're driving along the street. Suddenly you see there's a restaurant with a very long queue. What would you do? There might be a bit of a curiosity that sparked in you. You might be wondering what's happening there. Oh dear, that's quite a long queue. So maybe people like me, that's a bit introvert. I mean, I like to be at home, so I'll just drive away. But I'm still curious. I will check that place out. Wait, what is this place? Maybe I can look for a time that's not so packed. I'll go. But in market, it's different. When it's hot, it's gonna get hotter, be it going up or coming down. So it's the thing called momentum is driven by. Just now we talked about FATA, right? Now I talk about FOMO. Fear of missing out, because takut tak dapat nanti peluang jadi skim cepat kaya sudah habis. So everyone keeps rushing in, and there's this fear of missing out that drives share price up and down. The volatility is there, definitely. All right. So the next thing that most traders will look at, and why do they stare at the screen, is this thing called trade monitor. Trade monitor, trade monitor, trade monitor. You can actually go and configure in your CanTrade to get this screen out, and you see that this thing keep moving, keep moving, keep moving, keep moving, keep streaming through. So to give you a bit of an gist on this, will be an interesting one because there's a buying interest. Green color is a buying interest. Red color is a selling interest. So what you're actually seeking on for is actually interest. Buying or selling interest. Kalau dia jual gila, jangan sentuh. Don't touch, don't touch, don't touch. So what do you look out for? Buying interest here, you want to look for something like this. Oh dear. YNG, you're so good and high tech, but like I say, this is a very dated, very dated print screen. So it might, while it's dated, but the essence is still the same. The concept is still the same. So they are buying interest, and bigger traders. What takes them? What makes them excited to pull satu tangan? Okay. Okay lah, my writing is really bad lah. 500K volume is when there is a big transaction happening. I mean, this one can be not big. That's not big on. Once they saw something big, they will rush in, or they might test it. So that's why you can see sometimes it has this small one. I bet a lot of people will be wondering, "Wait, what is this? What is happening? Is it some weird alien spaceship algo coming into? What are they doing?" It could be traders trying to find the counterparty. Remember, counterparty means the other the broker on the other side. So remember, this is what the conventional day traders will look for. And from Kenanga is we are 73 lah, huh? All right, remember us 73, huh? Broker code, that is. All right, so this is what they look out for when they are seeking out for momentum. All right, the next slide that I'm gonna move up. I hope I'm not boring you guys, huh? So do pour in more Q&A, and we can have a more interactive session. So the next slide I'm going into is actually daily pivots. What are pivot points? Is actually a technical indicator written by, I don't know which Guilo lah, huh? The Guilo it is lah. It averages a high, low, close, and divide by the average of the three, and then you get a pivot point here. Pivot point. You can snap on the formula, or you can Google it. I mean, the wonders of the world is called Google.com nowadays. I mean, I don't know what happened to Netscape or Mozilla Firefox lah. All right. Then how do you actually calculate your resistance level? Is 2 times your pivot minus your low, while your R2 is actually PS1 minus R1. So you basically need to come up these three first. Then you can define your second level. All right. So every level you can look at it as a support and resistance and support resistance. What is support and resistance? Basically, well, if you're at home, at the comfort of your home, you can try and stand up and look down on the floor and try and jump on it. So you can't break the floor, right? So that is a support. But how do you break the ceiling? I mean, I can't, so I walk up and take the lift, or I take the stairs. So I go up one higher level. So my resistance, I'm on a higher level. When I'm on a higher level, I can't break the floor also. So my resistance will become my floor. All right. So the question is, how do I use it? Well, it's easy. When the share price breaks either one level, you follow. So here it is. Let's say I have a pivot point. Let me draw. Let me find a spot here. Okay, spot here. There's a P level here. This is not a very good spot, huh? I got a P level here called pivot level here. Then I got an R1 here. Then I got an R2 here. Then I got an S1 here. Then I got S2 here. So My share price is like here. Ding, 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 ding. What do? Nothing. Why? It's neither breaching either the support or the pivot point. So when it breaks through here, ding, ding, and if here is called 50 cent, your entry can be 505. Oh my God, there's too many zero. All right, 505. That is your entry signal. So if it goes higher after you have entered, what can you do? You can use this as another breakout to either accumulate, or you can use it as a reference to take some profit. You see? So it is very easy. I mean, there's a lot of people out there, you know, they spend their time, like to spend their time on drawing support resistance. But I think if there's enough Q&A tonight, I will teach you the easiest way to draw support and resistance without anyone guiding. It's a bonus, all right? So keep the question coming in. So this is a buy on strength strategy when it move up. So on a buy on weakness, imagine, let me delete this so that there's no confusion. I remain the level here. Suddenly my price is ding, 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 come down. Whoa, whoa. Is there any stock that trade like that recently? I mean, whoever answered that right, I mean, I can spend a bit more time lah. It's raining anyway, I can't go out. Okay. I will still spend time with you guys. So when it comes up and cross this level, it's a signal to buy. But of course, you will ask me, what if it does this, then come down, does this, then come down? Well, you need to believe in what kind of risk that you're going to take when a stock plunge down. Are you willing to take that risk or are you not? If you're willing to take that risk, by all means go. If you cannot afford to lose, do not go. So essentially, that is the case. All right. Okay. There's a bit of a duplication. So we are almost like 45 minutes. I hope I got more time to share with you guys. So essentially this the CanTrade platform that we have. This is your market trade monitor in a smaller format that you can actually look out for. This is your most active screen. So what is essential for day traders is also the layout of their machine, the trading platform and whatsoever. They're very, very particular. If there's one day it is out of sync, they don't feel like trading, they might not trade. Remember, when you do not feel like it, do not force a trade because it's not something that you are confident. All right? Remember this. If you're not confident, do not trade. That is one of the golden rules. You only trade things that you have high confidence in because you know it will work to your age. Why do I say that? It's because in market, we are just looking to increase our win probability. Well, I can share with you this golden formula of getting rich in market. Do you want to know? Well, it's so simple. Win more than lose low. And to do that, well, it's easy to say, but it's very hard to do. Why? Because essentially we are all affected emotionally by the market on what is moving. A lot of temptations out there to buy this stock. Ayo, I missed this stock. It went up, limit up. Oh, limit up. Lama tak dengar. So, ayo, wasted. Well, if you're not confident, do not touch it. It's not worth it. Even if you want to try it, can you try it? Yes. If you're not confident, lower your size, try it out, get experience, write your notes. That's where you improve. This very, very, very important. See, there's 3 very that I highlighted. The importance of it is very, very, very important. I also forgot how many very already. So always remember this. When we participate in the market, we are responsible for our own profit and loss. It's not my dealer, not my broker, not my friend, not whoever that I've met. It's because we are the one that could be giving we either gave the instruction for someone to execute, or we executed it ourselves. So the responsibility lies on us. If you are not confident, let go of the opportunity. Build up your knowledge. Come back again. Repeat. There's no shortcut. There's definitely no shortcut. So it comes to the question that can everyone become a day trader? Unfortunately, no, because first, it's very time consuming. Second, it requires a very high level of discipline, and it is not as easy as it seems because it actually you have a lot of battle with yourself. I mean, you're looking in the mirror, what am I doing today? Why did I make this silly mistake? How can I come out from it? All these questions are surging and surging. So the more you lose, the more you break yourself, see? So am I doing the right thing? Well, when the market comes down, and if you can only long, what do you do? Nothing, all right? But when the market is trending up, and I can only long, what do I do? Buy. Why? Because trend is your friend. The trend is always your friend. Jangan jadi hero. Don't go against the trend. Padanya later, wah, cedera parah, koyak, kepala, whoosh. Why the blood flowing non-stop? I mean, I'm sweating now a bit, although it's raining. Gemuruh lah, that's why I sweat a bit. So this is where that's what a lot of mistakes where we first step into the so-called investment scene, the trading scene. The first mistake that we make is we did not set an objective, the objective. Remember this is very, very important. Once you have that objective, you have a guide to actually go forward to see how you can do things and plan for it, all right? Now I'll move into the future trend of trading. I mean, how do I put this? The next slide that I'm gonna show you, I hope most of you would have seen it. Some of you might have not, but that is the reality of things where we're all moving forward to more and more technology adaptation, all right? How many have seen this thing before? I mean, it could look alien to some of them, those people that are born after 2000, all right? I mean, I still have a car that uses this, and it's quite fun. I like that. This is how we start in terms of when we started to learn how to drive. This is what we use. We need to shift the gear knob manually. Oh dear. It could be some fun for someone, tapi I think most of us work in KL, and the jam is quite a good workout for us for most of the left leg if you use this thing, right? So what is currently in the market? Wish, apa ni? Simplify, changes the gear automatically. So what I'm trying to bring out the point is, somehow we all need to move forward where, while even any successful trader, they will want to look into automation so that they do not need to stress out. So maybe for an example, do you get people to queue for you when there's something that's in trend and you want it so badly? It could be a Billie Eilish ticket. For me, it's a Jackie Chan ticket. I couldn't go for a queue. I get someone to queue for me. But in this stage of time, I get a robot to queue for me, an execution algo. It can be there. It'll help me to jaga, look at it. Is it tiring for them? I mean, as long as I pay my Kenanga bills then I'm safe I need, not really safe. I also need to pay my broadband bills. Kalau tidak, tak boleh naik internet So these are the essentials. Will they get tired? Not really. As long as these two, power supply and internet, is there, it can actually help you jaga your trade. So this is the evolution of things. And as we move forward, as we grow forward in the next few years, do we see more day traders looking at the screen during trading hours? I think in a quick 5 to 7 years, unlikely. Why? Because this is where we are heading towards to. We are actually figuring out what kind of logic that we have in our trading ideas, and we're starting to code it out. So to test out our hypothesis on the strategy, is the system working? I mean, in this context, trading system is your strategy, but the system is a system operating system itself. So does our trading system work? Does it give me a good probability? Then you heard a lot of people from the Quilo say they talk about Sharpe ratio, Kelly ratio, Sortino. Oh, well, I'm just a China peg lah. I just want to see if I win more than I lose lah. All right. So in a very simple term, why do I highlight that? Is because we might not be as complex as those high people, but we only know one thing: money in my pocket is money in my pocket, right? So how much? Every $1 I put into trade is how much gonna get back after a year. It's a very clear cut, and how many win and losses and how far can I stomach my risk is a very simple math. Well, you don't need to Google out Sharpe ratio. You don't need to know. I mean, it's good to know, but does it really affect in reality of things? Not really. It's all about testing a hypothesis on things. So now going forward, we are looking to see, you can go for import your data from Yahoo Finance, then you can download it. I'm quite a novice in programming. So then you actually see what you want to define in terms of the timeline. All this, you define it. Then you define a trading signal. Then you define a new buy signal and a sell signal. Then you test it. So data quality also comes into play. So do we spend more time researching in the future? That's my point. Yes, we will spend more time researching on how to get it right. But is there a perfect strategy? No. Remember this. There's never a perfect strategy, but there is a strategy of higher probability of success. That is what we are looking for. And even so, what are we looking for in all this strategy is called consistency. I mean, it's consistency, huh? Why is this? Also because we want to test if our hypothesis of ideas in a good market and in a bad market, can we survive the bad market? Is the strategy robust enough? Is the logic robust enough to go for it? So hopefully in another few years' time, we'll see more full automation, more of development of code coming in. The shift in day trading would have been shifting. So why do I say that? While a solo day trader that just started out, if they are gonna stare at the screen, they will lose out. I'm gonna demonstrate something here that I mean, you all can see me, right? I'm gonna stare at the screen, and what I'm gonna do now is blink. All right. Did you just see that? Some of you might not, right? So by the blinking itself is on average about 150 millisecond, 100 to 200 millisecond, depending who blinks faster, right? But with a technology that rides on speed, right? It's getting so fast, it can be in the world trading. If you are interested to read in books, you can Google this book called Flash Boys. By Michael Lewis. It tells you about how much people are paying for a high-speed cable so that they can beat the speed of a blink of an eye. So sometimes when you blink your eye, there are hundreds of trades being done already in the market. So can we compete with machine? Well, if you watch Terminator, I think the humans still win, but well, in terms of this, I don't think I can. So the adaptation to machine is real and it's coming and it's going to be so fast. So that's where the future of trading is coming in. And just to share a bit on our company Kenanga is where if a bit outside of trading, where I think most of us, or most of the people or the audience known us as a broking house, and an investment bank that does corporate finance, a lot of this. But little did they know that what if you can use the money in your trust account like a normal bank? Well, if you want to know more about it, there's this thing called Kenanga Money. You can actually go to your app store and look for Kenanga Money. You'll get a card like this. Okay. You get a card like this. And once you download the Kenanga Money app, right, you can actually reload your wallet from your trust account to actually use it. So can you imagine a world where you can trade different markets and you make money? I mean, I'm actually quoting a better scenario now. I mean, there could be losses where if you are a serious trader, you have made money in your trust account and you're in overseas with an internet connection, and can you spend your money? Yes. Or with just one card like this. Yep, you can use it. We are already there. So it's quite seamless in that context. And this is where, as a broking house, the largest independent broker in town and independent investment bank, this is where we are headed to. And we highly encourage people to go on and study more, read more about all this, and how can we go forward to help you build your wealth creation. Hence, we are actually very happy to share a lot more knowledge. And yep, that's why we are all out there. So the next, I'm gonna move to the Q&A slide. And in this Q&A slide, I'm gonna share another slide after this, which is a picture that I want everyone to see is, if you're not prepared in the market, I think you can see how the sheep end up when they walk out, right? Kering kontang a bit lah, huh? Gemuknya. So always be prepared. Always be prepared. And yep, so far that's all from me in terms of sharing. I'll deal more and take more Q&A, and hopefully it can be a bit more interactive. I hope my session doesn't bore you guys.
All right, thank you so much, Adrian Ng, for sharing with us a very insightful session on day trading. All right, so if you have any questions to ask our speaker today, you may write them at the Q&A box so we can manage your questions. All right, so the first questions by Nguat Lai. How do we filter for stocks that are suitable for day trading?
Okay, that is a very interesting question. I think it all depends on what is your preference, because everyone's preference is very different. Some might look out for, high volume. High volume is one criteria. Second is high volatility. There's a bullish engulfing bar. Definitely you want to look at it. It catch your attention. Then stocks with these two criteria. Then some that are more conservative, right? They might want to look for stocks that are actually oversold. You see, day trading doesn't just work in terms of stocks that are going up. It can also work for stocks that are coming down. It's then a rebound opportunity. So it all depends on the person's nature. Are they a bit more aggressive, risk-taking, or are they more conservative by nature? So if you're a bit more conservative by nature, maybe you can look for RSI oversold stocks and set up for it. But the problem now in our market is there's no execution algos that actually help you to buy as it crosses over. So you will need to monitor your market, which can be a bit more strenuous. And for those that are on momentum play, the best one is still your bullish engulfing and high volume surge, where you can actually see in your trade monitor. Yep. For those that actually did not do much work or homework or trading plan before the market, right? They will need to see what's happening in the market, and also write notes about it. Most importantly, write notes about it, because what is happening in the world is becoming a bit more funny, because last night, I think everyone saw Dow actually did very strongly. And the problem is today, our market, the moment it opened, there's a strong profit taking before it actually surged. So there is a bit of a factor that you want to watch out, and always look out for what kind of stop loss you can afford to. Is it too narrow? Is it too wide? All these are all consideration factor. Yep.
All right. Thank you so much, Adrian. Okay, give me a minute. How do we scan intraday counters? Is that same questions?
I think similar.
Similar.
Scanning intraday counters is similar. So yeah, you can look for those that are in the slides. And yes.
Okay. There's one participant who asks us, can you share with us how to draw support and resistance? Have you done that?
I think we can, but I think the questions are a bit sad. If I got another 10 more questions than this open 9 questions, maybe I'll consider that. So keep the questions coming in, guys.
How do I access Market Trade Monitor in Kenanga website? This question is by Francis.
I do not have a login to my Can Trade now, so I couldn't show you. But let me revert back to my slide here. You can look out for this market thingy, and you can try it out and look into it to see if there's a Market Trade Monitor label or a market streamer. Then you can actually click on it. It'll pop out. So then if this small little window here is to change the layout. So you can actually explore this part and also this part. So yeah. But be careful with the Market Trade Monitor, because it will actually drive you, your anxiety level will be very high because of your FOMO. Yeah.
Okay, and the follow-up question by Francis is, what's the use of Market Trade Monitor?
Market Trade Monitor generally for conventional traders is just for what you call the flows. People want to see where the money flow is. When you see, wow, when I come out to drink with you and we talk about the flow is here, the flow is there. Wow, sounds advanced, but actually it's not. So you want to see the buying flow and the selling flow, then you can determine where is the interest is. It's more like getting the gist of where the interest is. Yep.
Okay, thank you so much. The next question is like, Ifendi, what is the best time frame to use pivot point?
Oh, that's a very interesting question, Ifendi. I'm glad you asked. Pivot point is one indicator that does not have time frame, because it's actually based on your previous day. The calculation of this indicator is based on your previous day high-low close. Which time frame is suitable for trading? Good question. I think that if it's a very high volatile stock, let me share another screen. I'm gonna share my trading view. Hold on. Okay, let me go to. All right, coming in, incoming. Okay, can everyone see my screen here? What stock is this? LGMS, right?
Yep, that's right.
So as you all can see today, there's a very high participation rate here, where the volume surge here out after a bit of a consolidation here. And in this scenario of a high frequency, right, where the participation is so strong, right, you can actually go for 5 minutes to see if there's a good opportunity here to enter, like here. By the way, trading view is very powerful, and I always encourage one more tip here. Always buka magnet. Senang. Use guna magnet yang banyak strong, power. Here, okay, here can be an entry point here, resistance point. Why flat? Sometimes we just like things that are flat. Then another thing that you can see, easy. By the way, I'm not good at drawing lines. A bit sengek sometimes lah. So you can see it's a bit of an uptrend, and this is a high low, and here is flat. It can be a very good entry. So you want to look for things like this. Of course, if you are greedy and tak mau keluar, pak mampus. Okay, so this is where day trading is very exciting and very scary. This is what I'm trying to say. For 5-minute chart. So maybe you can say, "Oi, 5-minute lama ni." So maybe I want to go 1 minute. 1 minute. What do I look for? I look for the same thing. So at 1 minute, you can enter here. Ingat one thing tip for the day, buka magnet. Tengok, oish, senang. Kau tim. Here can be an entry point, flat. All right, but the condition is you must understand when to use it. And you must have an objective when you are participating in something that is very, very fast. It can also come down very, very fast. So you might want to be very, very careful with your trade. When it starts to turn, you might want to exit. But another piece of advice is try to stick with one time frame first. Get used to one first. Get used to one first before you go for another time frame. It can be 15, 30 day. Nowadays, I look at weekly. Senang lah. Want to see where is the takut ma, so volatile. So this is what I'll look at lah. Yep.
All right. Thank you so much, Adrian. What are the indicators that you often use for intraday trading? So this question is by Jimmy.
I will use indicators like your Bollinger Band, Kelto channels, but I used to look at price volume trend, MACD. I actually don't look at it. But in a day, it's a very simple one. All of this.
Okay.
Yep. Oh, yeah. One more tip. Stochastic is a very powerful oscillator. Do look into it. Yep.
Okay. And stochastic. Raymond would like to ask the next question. What is the period of time in a day that you will spend to monitor and enter a trade? For example, like, is it opening bell like 9 to 10 a.m. or is it the closing time like 4 to 5 p.m.?
If you are serious about looking into the market for a day trade, unfortunately, it's the whole trading hour. Yeah, you need to have that allocation of time because things could go wrong in the process. That's why while day trading sounds like novelty to most people, where the idea is very good, you can make quick money, lunch money on bubble tea or drink money. Problem is there is also quite some time involved.
Okay. So your style is whole day, huh? It's not like particular hour, like opening hour where it is more volatile. And you make it also reverse fairly fast.
Yes. So yeah.
Now, Liu would like to ask the next question. Say that the current quote is at 1.01 and /1.03. An order put in at 1.02 gets done in milliseconds. How is this possible?
That's a very good question, Liu. That's why I say the machines are coming. These are all execution algos by foreign banks where they have your sniper, they have your iceberg, all this. They have this instruction sitting in their server, but it's not in Bursa, so it's monitoring. So when there's someone parked there, then it will snipe it. So there's no chance for you to react. So the next thing is, for that age, is it worth to pay for this age? That is where a lot of these small mini fractions of money that people deem small is actually very big. Like I have recommended earlier, do look out for a book, Flash Boys, and you'll understand what I mean. Yeah, do read it up. Yeah.
Okay. Samuel would like to ask, how much capital do we need to start day trading?
Well,
Say
it's
the
not a lot
minimum
of
capital.
it's not a lot of money, because I think that if you just graduated, it is end of the day, I will always urge people to look at the affordability. If they lose, look back from work it backward from that in, because you can have borrowed a lot of money and if whatsoever, and you whack the market, and if you lose it, you can't afford to pay. That's not something that we want to get involved in. So if you can only afford to lose 500 and you have a capital of like 10K, maybe you can go 5K first for a starter to warm up, or even 250 to warm up. So there's no rush, because it's a learning process and also sharpening your skills along the way. But of course, if you have a lot more money, 100, 200K, no problem. Yeah.
All right. Thank you so much, Adrian. Okay, so the next question is, what is this about broker code? Can you explain more? Sometimes a lot of 1111 appears in the MTM.
Oh, all right. So 111 is actually they are testing out to see who is the broker behind the queue. So the broker behind the queue is normally represented by the code. So for Kenanga is 73, for Arfin Huang is 68. Normally there's a zero behind in front. So from there they recognize the code, they know is that Counterparty, Kenanga, or Arfin Huang.
Okay, hope that answered the question. Let me pick the next question. Do day traders need the skill to read market depth? And what is your
Unfortunately, as we are still more in that so-called manual mode, yes. But as we progress forward, where more automation takes place, where strategy takes place, then lesser. Yeah.
Okay. So how do you read that? Like, you see there are more there are bigger depth in the bid and bigger depth in us. What does that mean? How do you interpret that?
Maybe I couldn't explain this more properly, but I think we just need to pair this with the so-called logic of momentum. So another practice that day traders do, the big boys, what do? They have this skill called spoofing. It's something that is not encouraged and is actually illegal. I think whoever that does spoofing will actually get warning from the regulators. So I think the chances now are actually lower and lower. You can ask any remiser or dealer. Also, they will know about this, because if they park a very big buy in the buy queue, like let's say dua tangan, I hope everyone knows apa tangan already. Means 1 million share there at the buyer. Then within millisecond or after a second or two, they pull it away. Kosong, zeroize it. That is called spoofing. So spoofing itself is to give people that idea of comfort that, wah, banyak buyer queuing, jangan risau. Then suddenly, pam, okay lah. I'm quite gemuk also lah. So tak payah tanpa so bengkak sikit lah. So in that sense, like is to trick retailers or whatsoever. So that's why the regulators are very hard on people that spoof. But sometimes they do not pull it away within minutes. So it might create a scene that, wow, you still have a safety net, but actually it's not true. It's not true. Yeah.
But I think we often also see that in the market, where suddenly a lot of big orders disappear. If there are some proxy account to do that, how do we detect that lah?
I think while we cannot, I always share with everyone that we cannot control what people are trying to do, what are they thinking. So when I participated when we are participating in the market, I just want to know one thing. Am I happy enough with the current profit? And is the current profit already hit my objective? And what is my stop loss level? Anything that happened in between, I actually don't care. I don't care if you spoof or not. You can spoof at the level that it didn't hit my stop loss. You continue to do it because it didn't hit my stop loss level, and it's neither at my take profit level and it's neither at my stop loss level. So I actually don't care. So it's to train your mind not to how to filter out this noise. Also, is very important. Yep.
All right. The next question is, can we use R vol more than 3 or 5 on lower time frame to detect potential volume spike?
What is the question again?
So this question is asked by Faisal Ibrahim. Can we use R vol? I think vol stands for volume. R vol more than 3 or 5 on lower time frame to detect potential volume spike. I believe it is one of the indicators.
Oh, okay. Our percentage or something like that. I think well, the thing about dealing with time frame is I keep emphasizing
Relative
this.
volume, he explained. Yeah, R vol is
Yeah.
relative volume.
Or relative volume. Yes, you can. Yes, you can in lower time frame. But the problem with lower time frame is too noisy. So that's why when we look into the time frame itself, we want to get adjusted to, we want to be familiar with it, be it 1 minute, be it 5 minutes, so we understand the familiarity of that, your so-called relative technique. So if you have that technique already, right, you want to maintain the consistency to continue to monitor so that you can write your note to develop your own hypothesis from there. Is there a shortcut and a quick answer that I can give you here? Unfortunately, no, because personally, I do not look at volume in that context. But when we look in from the strategy context, yes, because that's how we can program it to capture something. But when you are actually looking at it on a daily basis, then unlikely. Yeah.
All right. The next question. Just now you mentioned about counterparty. So Chua would like to ask, why do they need to know the counterparty?
Nates siapa jerung lah, bro.
Okay.
Siapa jerung itu counterparty normally got jerung lah. So if they saw the counterparty there, mungkin avoid lah, avoid. Yeah. Dia
Alright.
tak mau kacau, tak mau kacau lah.
Okay.
Yeah.
Now, why Kyung would like to follow up to ask, experienced traders like to say, if your counterparty is JP Morgan and they are selling, we need to be careful and ready to square off our position anytime. So his question is, do you agree with this?
No.
Okay, why not?
You need to run.
Okay, not ready to square off, but already need to run.
Because
can
I think
explain the rationale.
I think mostly it happens on rebalancing where they are prepared to exit and they need to get their fair share of volume done. So if they are closer to the rebalancing period and they cannot get it, or is on the last day of the rebalancing, that's why you see there's certain spike in share price for your KLCI stock, and there's a certain spike down. They need to get it out regardless. So when you see it in like testing on high volume, right? So that could be an indication lah.
So
because they already have a budget on how much to sell, and if the volume is huge, right, then and they have not finished most of it, and the deadline is already that day, right, they will dump everything on.
Okay. Yeah. So JP Morgan is more famous for that, is it?
No. We don't want to classify it that way, but mostly on foreign brokers, because it's your foreign funds that have this pattern. So that we are not saying that which broker is like this. It could come through us or it can come through any others also. But because JP Morgan by default is a foreign booking house, so it has a higher probability of that happening.
Okay. So the rebalancing period is usually like year end or financial year end, fiscal year end.
They have their own fund rebalancing period normally that you can check it all online. So on your so-called, there are quite some platforms that you actually read on Bursa, your so-called Malaysia Stock Biz, your KLCI stock screener. Nowadays, you got stock bidder, all this is quite social. And recently, I think there's investing note, there's a community. You all can all just find out from all these places. But if you're on short-term trading, actually all this doesn't really matter. The chart is more important. Yeah.
Okay.
Yep.
Just now you talk about broker code, right? So the follow-up question is, how do we know which broker code refers to which broker? Is there a platform where we can check?
Okay, okay, good question, good question. Hold on.
They are trying to identify the Jerong.
But you must first find out where the Jurong live lah. Okay, let me open.
Yeah.
Malaysia broker code.
Okay.
There you go. Everything is here.
Okay. Oh, wow.
Yeah.
Okay. Just head over to Google.
Bursa lah, Bursa. Actually, I think we must give credit to our Bursa Malaysia side because they are actually putting out quite a lot of effort in terms of educating most of the people around that is willing to learn. Hopefully, more will pick this up also. So, I think that's why we are also very, very supportive on all this effort. And I think even Shane, you have been dealing with more webinars with Bursa than me, right? So I think, yeah, in terms of knowledge, I think the first thing, if you're new, you want to be dealing in so-called investing or even trading, master the website of Bursa Malaysia first. There is like Bursa Marketplace, Anywhere Academy, or here Sustain Bursa to you. Check it out of curiosity, check it out. It doesn't hurt, it's free. Yeah.
Yeah, it's free, and a lot of resources are there.
Yeah.
All right. How do we make better use of the daily tally trading participating data from Bursa Malaysia?
It's interesting. That is a fairly interesting question, which I actually I'm not relying on it. But now that there's someone pointed it out, maybe I can start thinking on how to utilize it but it also that you need to form a hypothesis that where it can be actually useful. What kind of stock that you're actually looking to trade. Unfortunately, I think if you want good movements are penny stocks in Malaysia for day trading volatility. Yeah, because even our newly listed tags are all from penny range to dollar range. So yeah, so if you have those broad participation, right, then maybe you want to look into the net selling and the net buying of the participation to make relevance out of it, to identify who are the players of the day and what it could be tomorrow. But the next question I'll ask myself, is it too much of effort and am I lazy to do it? Yeah, so I will start thinking about it, but it'll take a lot more time because the participation flow every day will be very different. So to identify a very is then how to harvest this information is quite there's quite some thought process that you need to put into it.
All right.
Yeah.
So if you want to take day trading skills one step further, is there any books or reading materials that you can recommend us to read up?
I think you can start with. I wouldn't want to promote day trading in terms of the frequency, but I want to promote one thing that everyone can pick up. Is called systematic trading, which will help most of us to nurture very good habits in approaching the market. So in that context, right, there's this book called The Turtle Traders. This is a very good book that I mean, recommend people to read because he's a legend. Richard Dennis and also Willem Eckhart is a legend where they are both very good friends. So one day they have this argument that can a trader be nurtured or is it by nature? So it's a nurture versus nature kind of argument. So Richard Dennis back then is a prince of the pit. I mean, a lot of us, do not know what is a trading pit is lah. I mean, I also learned about it like last few years, the pit theory, what is a pit. So So Richard Tennis placed a bet that the traders can be trained, and they ran an experiment that where they actually hired convicts, they hired cleaners on the road, and wow, it is amazing. One of the most of the so-called traders that they hire are highly successful, and there's one yes, Chesapeake Funds. This is his most famous disciple that started a fund that is still running today. So they are very highly successful. They're all millionaires. It can be nurtured, but the nurturing process is very painful. There's a lot of disciplining happening. So one of the caveat is if you join me and you do not listen to me and follow my method, you're out. But if you follow my method and you lose money, you're fine. You're losing my money. So in that context, when they made money, they get a share. So by default, they actually follow through. So this book is very interesting. Do read it up. Start from here. Then you appreciate. Then the next book that after this, to learn and appreciate about speed, is this. It's a very good book. It's a very, very good book. For a start, then everyone can get an idea that we might as well want to get the basics right. Then we start by jump-starting our journey into the trading world without a clue. Start reading first, research first before we jump in. Yeah.
All right. So thank you so much, Adrian. I have read the Total Trader book, and I can vouch that it is definitely a very good book. Let's do one last question since time is running out. This is by Alka. Do you trade based on corporate news or announcement as well? Like you read some news, then you play some trades?
Not really, because yes, we can study about it, but nowadays it's more like sell on news kind of reaction. So I'm actually why I say that is because I encourage people to learn to adapt to a way that they can actually reduce the noise. Yes, they can take a view, but they want to reduce the noise of what is happening and stick to their plan on how to react if the good thing happened and if the bad thing happened. So you act according to your plan. And how do you plan this? On a day-to-day basis, I don't include much news. Is because not every day they are impactful news, and most of the time price move faster than the news. So that is how the price action movement is actually being reflected in the market. So for shorter term, I would like to stick more. I would personally filter out news, but I think it's good to know. It's good to know, but how do you make use of it? One must actually study that. Is it relevant or not? Yeah.
All right. Thank you so much, Adrian, for sharing with us the insights into day trading. All right. So let me share with you more about our next Can Trade webinar. The next Can Trade webinar is happening on next Tuesday, 13th of September from 8:30 to 9:45 p.m. So it's titled Second Half of 2022 Market Outlook by CSOP, Turning to China for Growth. So on next Tuesday, we are going to talk about the China market outlook. All right. So where are the growth opportunities in China? So joining us from this for this webinar is our our wonderful colleagues from CSOP Asset Management from Hong Kong. So he will join us to share with us his ideas about the possible opportunities for growth in China. All right. So if you want to join this, let me just give you the webinar link. All right. So I've just given you the webinar link in the chat. So you'll be able to register for it to understand where are the opportunities in China. So for those of you who haven't had a Kenanga stock trading account, you may fill up this online form, www.cantrade.com.my/account-form. So once you key in your interest in opening an account with Kenanga, then Kenanga will arrange a friendly dealer representative to cater to you to open your stock trading account. So if you haven't joined Kenanga Trade to Win Telegram channel, here is the Telegram channel link. So in Kenanga Trade to Win Telegram channel, you'll be able to get many trading ideas that they publish in their Telegram channel. With that, I want to thank Mr. Adrian Ng, who is the head of Quant Sales Advisory for Kenanga Investment Bank, for joining us today to discuss about how do we day trade the market profitably. Thank you so much, Adrian. We have gained a lot of value from this webinar from you.
Thank you, Shane. Thank you, everyone. Hope to see you guys in the future. Yep.
Thanks. And it certainly is a very insightful, educational, and entertaining session as well. Love your humor.
All right. See you guys. Good night. Bye.